is our regular market report. My name is Vlado Kovačević, Director of the Commodity Exchange Novi Sad, and it is my great pleasure to be your moderator today. First, I would like to thank you, ADM Investment Service, Agriculture and Food, S&P Global Energy, and Bar Chart for supporting the EGF. And if you like to become a partner, please just contact us. Today we have just outstanding speaker. With us is Amrutha Dileep Chingoroth. Amrutha is a price reporter from Agriculture and Food, S&P Global Energy, and she will provide us with excellent report on the market prices, market trends, trade flows, and the key drivers shaping our market. Many thanks, Amrutha, again for being with us today. Here is with us Eddie Tofik, Head of Technical Analysis at the ADM Investment Service. He is also chairman of the UK Society of the Technical Analysts. Eddie will present the technical outlook, and it will help us to better understand where the price may be heading in the weeks ahead. So, Eddie, many thanks once again. You're famous, those standing technical analyses are more than needed and more than welcome. So, once again, this is as usual open discussion, so please feel free to post your opinion, comments in the chat, and we will do our best to answer all those questions in the Q&A session. So without further ado, Amrutha, floor is yours. Thank you.
Thank you. Thank you, Vlado, for the introduction, and thanks for the invite. So good morning all, and hope you all are enjoying the summer so far. So today I'll give a briefing about the Black Sea market in July and what we should look for in August, particularly in terms of pricing and trends in the market. So I'll discuss what were the market trends for the Black Sea wheat and corn in July and what would be the outlook for this month. You might hear more detail about corn from my side, as my major market is Black Sea corn, and I'll fairly touch upon the wheat market as well today. So let's start with corn. Before digging into the prices and trends, let's first briefly touch upon the supply and demand side. On the supply side, as the new crop is approaching, the production looks good so far in the Black Sea and the Eastern Europe. So though there have been dry spells in some part of the Ukraine lately, overall the new crop looks good in terms of quality and production, unlike the Western Europe, where, as you all might already know, the very hot weather, which has affected the corn production, particularly in France. So if you see on the chart, the production forecast from all the major producers in the Balkan and the Black Sea are higher than the previous year, with a 5% increase expected in Ukraine, around 5.4% in Romania, and an amazing 47% in Serbia. And Bulgaria is all set to double up the production and yield this year. From what I have heard so far, the temperature in July has been favorable for the pollination. As you know, it's a crucial period for determining the quality of the corn. And also in Romania, I have heard from several traders and producers about the trend of decreasing their land or the area under corn production, particularly because of these high temperatures and hot weather and the drought in consecutive years in the country. And it is quite amazing to see that despite a decrease in the area, the production forecasts are higher than last year. So imagine the yield the producers are expecting for the coming season. And if we look to the western side, as I mentioned, the hot summers and dry weather has severely affected the corn production in those regions, particularly for France, where the corn production is forecasted to drop by around 16%. And there is also a drop in production in supply in Spain and Italy, who are among the top destination markets for the Black Sea corn. And it would indeed favor the new crop from the region, as in the new crop from the Black Sea region. Now, coming to the demand side, with all the tensions and conflicts happening in the Black Sea, the real buying interest is very limited. In fact, negligible at the moment, particularly for a handy vessel, if you see. Though a major part, or like most of the old crop, is already sold, the remaining might find its home in Europe through coasters or to some Middle Eastern countries again through coaster vessels. And if we delve into each country, the first and foremost would be Turkey, which of course has been the primary destination for Ukrainian corn for the past years. There was a buying spree from Turkey at the time when the quota was introduced back in April for 3 million metric ton at a reduced tariff. And the buying spree gradually slowed down. And in fact, by June, the demand from Turkey was very, very slow, which really had an impact on the Ukraine corn prices, about which we will discuss soon. So, yeah, as of July 29th, the quota had around 310,000 metric ton yet to be filled. With the end of import quota on 31st of July, the demand or the need for the imported corn almost stopped from Turkey. Moreover, the local harvest is approaching, which is in September. So there is no real rush from the buyers to secure imported corn. And while talking to certain feed producers, I learned that most of them are covered for corn. So the demand remains weak, despite the fact that the internal prices in Turkey went up in the last couple of weeks with the escalating Black Sea tensions. And now coming to the European side, as I said earlier, the heat wave effect is expected to favor the Ukrainian and the Balkans corn. Hungary, for example, may import substantial volumes from Serbia, given Hungary's weak crop and Serbia's much stronger one. And among the European countries, the Netherlands and the Italy has been quite promising for the Ukrainian corn. So if you see at the chart on the right side, the share of Turkey has decreased as an importer of Ukrainian corn, while that of Italy and Netherlands slightly increased during the month. So this chart is from the POC ports lineups in Ukraine. And I have also heard from the traders about several trades happening or having happened to the Netherlands and Italy during the past months. And there are still some buying ideas for Sif Arak for August and September shipments of Ukrainian corn. And Italy has also been showing some interest for the coaster vessels lately. Now, turning to Egypt, another major market for Ukrainian corn, the South American supply is currently dominant there, which is more or less a seasonal trend at this time of the year. But in general, the flow of Ukraine corn to Egypt was very low this season, as the quality was considered lower than the South American corn by the Egyptian importers. And as you can see on the chart, the share of Spain has also significantly reduced. Though Spanish port lineup showed the arrival of Ukrainian vessels like 102 during July, but the US origin continues to dominate the Spanish market. So, going forward, at a first glance, it seems that the European destination could be the one for Ukraine corn. Let it be for the leftover old crop or the new crop, at least during the initial months via coasters or through railways, through the borders. Now, let's get into the pricing side of corn. This graph shows a pricing trend for POC, the Ukrainian corn, and the CVB market for the past year from July 2025 to July 2026. As we can see, the spread is getting wider as we pass the July in 2026, primarily because of the freight advantage that the CVB holds against the Ukraine at this time with the uncertain freight levels from the Ukraine ports. And it is also notable that the market activity for the CVB corn at this time of the year is very, very low, as the old crop is almost done from there. But still, could you see? I mean, we could see some activities for again for the coastal vessels, maybe to Greek or to some destinations like Cyprus or so. Though the chart shows the prices over the past year, I mean, I'm mainly focusing on the price trend for the last month. So the Black Sea corn prices had a mixed tone last month, as in they were growing from the start to the mid of the month and started to drop from there. And of course, the current attacks and uncertainties over the conflicts has been the major driving factor for the prices, along with the demand factor, which as I mentioned earlier about Turkey, the low demand from the country, and also the availability and competitiveness of other origins in certain destinations. So the Platts assessed the Ukrainian corn at $223 per metric ton on July 31st, which is up from 221.5 on July 1st and down from 232 from July 21st, which marked the highest during the month. And as the Black Sea tensions escalated in July, the corn buyers also adopted a wait and see approach, particularly in the first weeks of the month. And all crop offers from the Black Sea sellers were also limited during that time. And the FOB sellers also subsequently lowered their offers as the sustained attacks, high freight cost, and limited vessel availability reduced the number of ships which were willing to call at the Ukrainian ports. And with these uncertainties, the risk on trading on FOB basis limits the market activity for sure. And looking forward, the traders are expecting that the August and September market to be the on the lower side for the FOB basis, and most of the sellers have already switched to the new crop discussions, as most of them are done with the current 2025-2026 corn crop. Now, speaking of the new crop, the prices actually declined for the new crop as the favorable weather in July improved expectations for crop size and quality. The offers for November shipment fell from around 241 during the mid July to around 235 on July 31st. And the bids also declined from around 224 to 217 during the first week of July. And the buying interest also remained very limited from there on. And of course, now like as in yesterday, the new crop offers saw some slight increase, which is partially because of the dry spells in some areas of Ukraine. Yeah. Now let's talk about the global trends in prices. So here you could see the corn prices from different origins and in the destination market in Asia. So this chart shows the price trends from the start of this year till the end of July. You can see how the red line showing the Ukrainian corn had a slightly wavy pattern this year. One of the major factor that has been deciding the Ukrainian prices were Turkey, as they turned out to be the biggest buyer lately for Ukraine. And all the other origin prices have been showing an upward trend lately, largely driven by the geopolitical circumstances. And everyone is eyeing how the situation will turn out in the coming months. Everything with these conflicts has been so unpredictable and like really nothing short of a thriller film so far, to be honest. But the prices, especially for Black Sea, will depend on how things are going forward. So the escalating conflicts haven't had much an impact on corn as it had on wheat because the corn was almost towards the end of the season. However, if the situation continues for 2 months or so, it will have a significant impact on the new crop prices. I mean, even now, the forward buying interest for the new crop has diminished from what it was before the conflict. Or like before the escalation of the conflict. But it could also favor the CVB prices. So with the freight advantage, and with buyers turning to CVB ports to get the corn out, either of Ukrainian origin, or Romanian origin, or Serbian origin. So if the Ukrainian corn starts to flow out through the Romanian port, as was seen in 2022 when the war started, it could affect the local producers in terms of the competitiveness rather than the traders themselves. And also, the question would be, will the Ukrainian producers be willing to pay enough to cover the logistics involved in this transport from Ukraine to Romania? Um, and here, yeah, I'll also go through the other major corn markets globally and the latest updates that I received from my colleagues in these regions. So, starting from the top for Asia, the Asian corn prices continued to rise last week, which was largely driven by the demand from the destinations such as South Korea and Taiwan, and also from the higher freight rates from the renewed Iran war tensions. So the freight rates almost rose by around $3 to $5 week over week for the major freight routes for the Panamax vessels from Brazil, Argentina, and US Pacific to the Asian destinations. While in Latin America, the corn prices dropped last week, and the market sources have reported that the Iran is getting active in the Brazilian corn market and is interested in negotiating for Brazilian corn. So there were also some indications of Turkey showing buying ideas for Brazilian corn, just to be transshipped to Iran. And regarding the harvest, the Ministry of Agriculture in Argentina reported harvest 82% complete as of July 30 for Argentinian corn, and the Brazil's winter corn harvest reached around 65% completion by the end of July. Now, for in the US, the corn market was volatile last week with a clear divergence between the seaboard futures weakness and a firmer physical market supported by the logistics and the export demand. So the traders were describing the market as wild markets driven by shifting signals from geopolitics, weather, and the freight costs. Well, if you would like to discuss more on the global corn side, feel free to reach out and I can connect you with the experts from these regions itself, which would be much more helpful. Let's now see the wheat market. So I'll keep this section concise and focus on the most important market developments only. So in this graph here, you can see the major wheat prices. that of Australian wheat, the Canadian wheat, the French wheat, and most importantly, the million wheat marker, which represents the competitive price out of the Black Sea region, that is out of Russia 12.5, CVB 12.5, and Ukraine 11.5, normalized to 12.5. As you can see here in the chart, towards July, the Black Sea conflict pushed the global wheat prices high, particularly for the EU, the Australian, and the Canadian wheat. And these prices surged to a 2 year high as the traders sought alternative origins. Also, after a small uptick in early June, the Russian and the Ukrainian prices started to fall amid weak demand, which I'll explain in the next slide. So, yeah, this is the price chart for the million wheat marker. So when the news broke of intensified attacks on July 10th, the FOB prices surged with some panic buying. But soon after, it collapsed as Russia and Ukraine faced with having to market their wheat and the lack of vessels amid the attacks on the vessels. So which meant the absence of a real FOB demand. So the prices went right back to the pre-July 10 levels, which is in contrast to the CVB market, which is pricing at a premium of over 25 or $25 versus the Russia Ukraine. As traders seek to fulfill their tender obligations. So there were several scheduled shipments for August loads to Saudi Arabia, Jordan, Algeria, which the traders had to short cover for. And the orange and the green chart shows the CVB wheat prices for 12.5 and 11.5 respectively. So that sudden jump in prices was a really interesting story that happened last month. So there have been even instances or a time when the Russian and the CVB 12.5% were at parity or like crossed over, and now at a spread of over $25, and all this within a span of a month or so. And that's how the volatile these prices and the market could be, especially during the situations like this. um yeah, now let's go to the destination side. So the chart here shows the wheat sif marmara prices for costas 12.5 and the sif eastmed, the Egyptian prices for 12.5, which we launched on June 1st. So the key thing to note here is the massive increase in freight prices from just $18 over a month ago to now to nearly almost high 30s just to Egypt. And to other places like Bangladesh, the rates went up by nearly 43 to 65 in just 2 weeks. And for the SIF Marmara market, with the port strikes at Rostov and Kerch Strait, traders have effectively stopped offering and bidding, with the market being totally nominal these days. And another interesting price to look into would be the French market. So the French prices, similar to Romania and Bulgarian wheat, surged due to the Black Sea tensions, but on top of that, due to the heat wave sweeping through the EU, which I mentioned earlier. So the wheat harvest has been complete in France, and the France is looking to compete with with other origins, especially since its key destination, the Morocco, has suspended the imports as they are harvesting their local crop, and they has extended its imports on software till August 31st or so. Yep. Now let's see the factors that could affect the prices and that should be monitored. So this basically sums up what we have discussed so far. The bearish factors in the market for grains would be the first and foremost the Black Sea tensions and the uncertain freight. Well, this is a benefit for some markets and a burden for others. So if the tensions continue, the prices on the FOB basis could drop further for Ukrainian wheat and corn, especially to match up with the growing freight and the unavailability of vessels. While this could give advantage to other markets, like for the CBB markets for wheat and for like the South American or the US origin to destinations including Spain and Egypt for corn. So the conflict tensions would turn out to be a bullish factor, particularly for the CBB market, as most of the buyers would seek the next best alternative from within the Black Sea and the Balkans. And second, many Black Sea grain buyers remain on the sidelines. They want greater clarity before making fresh purchases, and that caution is suppressing the demand. And another one, particularly for corn, would be how other origins are getting competitive. Like the South American corn is getting competitive to Asian destinations, to Egypt, and so on. So we used to see some flow, maybe a vessel or two of Ukrainian corn to South Korea monthly, which now has been affected due to the competitiveness of the South American corn, as I mentioned earlier. So furthermore, the production prospects of the new crop, which at the moment looks promising so far, could also drag the prices down for the new crop unless the tensions grow further, which then would be or might be a bullish for the Ukrainian corn, for the Ukrainian new crop corn. And on the brighter side, with the drought and the heat waves in the Western Europe, the European market is expected to import more corn from the Eastern Europe and the Black Sea, which is giving a bullish perspective for the corn prices. And finally, the demand from the Turkish feed industry. So this would be like a long term or a bullish factor for the new crop, and it will also depend on how the corn harvest in Turkey will turn out. And on the swing factor side, we obviously have the outcomes of any potential peace talks or higher authority meetings, which then will definitely be the major driver in either directions. And the exchange rates, like how the local currencies would be against the dollar. And also the Chinese economic stimulus measures, their reduction in imports and the dependency on foreign products will be a swing factor to monitor for sure. So yeah, that brings me to the end of my presentation, and I would be very happy to take your questions. So corn is my core market as a price reporter, and my team also includes specialists in wheat and soybeans. So please feel free to stay in touch to exchange market information, or let me connect you with the right colleagues. Thank you.
Rutka, many thanks for your excellent presentation. We used
Thank you.
to get from you very useful information, and we can just agree from the side of the commodity exchange. Exactly, we are seeing same situation right now. So many thanks once again. Eddie, please, floor is yours.
Okay. I hope you can hear me and you can see my presentation, Black Sea and Danube Monthly Grain Brief. Now, before we start properly, a message from my head of compliance, Mr. Philip Llewellyn. Please kindly let everyone know that what you're about to present are your own personal thoughts and views and not those of ADM, Archer Daniels Midland, Wild Flavors, Probiotics, Neovia, or any other part of the ADM group. Now get on with it. That's very important to understand. I'm sorry if I do this again. Now, this is not a technical analysis classroom. I would like you to, if you want to know more about technical analysis, then I would suggest you have a contact through to the Society of Technical Analysts. It's a very simple email address, which is technicalanalysts.com. Now, I produce free daily and weekly videos where you can find market analysis of various markets, including the grains and the vegetable and oilseeds markets, plus metals and various other things as well. And I have 3 longer-term analysis, which you can find. They're all video analysis, and I'm happy to present that to you if anybody's interested. My parent company is ADM, and there's a whole thing about ADM, which you can go through if you want in your own leisure. And the part that I'm involved in is ADM Investor Services, and those companies are these. There are 3. There's the ADM Investor Services Inc. in the United States. The one I work for in London, ADM Investor Services International Limited, which also has as part of it ADM IS BV in the Netherlands, which covers the European market, and then there's ADM IS Singapore in Singapore PTE Limited, which covers the Far East. And this is our history going back to 1966 for the futures markets. And the most important bit is there when ADM Investor Services International was established in London in 1998. I've been here since 1991, so 35 years. Now, mindful that time is short, so here is the final bit. Must have a read of that at some point if you want to, and I'm happy for you to do that. Here really is the final bit, and this tells you a little about who we are and what we do. This is our operations. Those are my details. That's our building in London. I produce daily, weekly, and annual technical analysis commentaries on FX, commodities, and other markets. I've been interviewed by the CME Group, Core Finance, FX Street, IGC, Bloomberg. That was very funny, that one. That was really funny. Commodity Trading Week, and also for Investing Channel. I am chairman, and this is full disclosure, I'm chairman of the UK Society of Technical Analysts. It's a not-for-profit organization. It's the oversight body for technical analysis in the UK. And I'm also, I produce other things such as Ghost in the Machine. This is about EUDR, which has been a hot topic in the last few years. And I'm also a director of the International Federation of Technical Analysts. And I was nominated for a award, and thank you. Now, that's going to be my presentation, and I'm now going to go and share a different screen, which is going to be my charts, and I'm going to look at Chicago wheat first. So I'm going to now share that now. So bear me 1 second, please. Vlada was very good at showing me how to use this. So here we go. You should see this very soon. Okay, complicated chart. It would be a lot simpler if it was tomorrow, because, or sorry, Friday, because this still has data from June, and I would normally get rid of that now that we're in August. There's a common theme from a technical analysis point of view, and there's a common theme in all the grain and to a certain degree also the corn market and veg oils as well. And that is that we had here, and I hope you can see, between June and July, this period here, we had a diamond bottom pattern, which was, as the name suggests, it was a bottoming pattern, a reversal pattern upwards. And we reversed upwards. The market reached the primary and secondary targets for this easily, which was around here somewhere. What was interesting about this was that, can you still hear me? I hope you can hear me, because I don't know. Vlado, can you hear me?
Yes, excellent.
Yeah. What was interesting about this is this developed into another pattern. This run-up is known as a vertical run-up pattern. And there's two things that happen. One is a straight run-up, which this is basically what's happened. Sometimes it has an extra extension on the top side, a little bit more, but it didn't really. It had a very small one, and I'm not going to count that this time around. The vertical run-up, which is this move from basically the end of June all the way up to the whole of July, effectively, it turns over. Half the time, the medium market is it drops 50% of the move, and it's done that. It did that yesterday. 651 and a quarter is 50% of the move for Chicago wheat. It drops that. 20% of the time, it goes down to about the 10% level, so somewhere around here, the 600 level. However, it's not done that, and what we have in the way is some important supports, mainly the short medium moving average, which is 637, and the medium moving average here, this one, the mauve one, which is 679. They are holding the market, but this 50% Fibonacci line has literally just stopped the market and pushed it back up. What you see, and this is usually for a run-up pattern, is it will turn down for about a month, and then it will resume the move upwards again. So we've had one run-up the whole of July, and we've peaked on the 24th of July. So that's really about a week and a bit ago. So by the end of August, by say the second from last week of August, so middle to end of August, we may see the beginnings of a further move higher. Now, in the meantime, we have developed a small head and shoulders pattern here. So there's the shoulder. It's not very clear. And this is not in every market, but only in Chicago wheat at the moment. But it's something, there's other markets similar in that. We have a shoulder, a head, and a second shoulder. It's not a perfect one, but the blue line is the neckline. We closed below it for 1 day, which was a day on Friday, but we turned straight back up again afterwards. So this has not been triggered. This pattern is still there, but it's not been triggered. We don't have any targets on the downside for this pattern. The big underlying pattern here is this bright green. I don't know if you can see the bright green lines. There's three green lines. This is called an Andrews pitchfork, and it is the move from the beginning of this year. So it's 2nd of January through to the end of June. So the first 6 months of this year, this pattern It's called a median. It's called the Andrews-Pitchfork or the median line method. It's about 120 years old, as in technical analysis, 130 years old. The market has a tendency to go along the middle line, the middle tine. The top tine acts as a resistance. The lower tine acts as a support, and it's a acceleratingly higher support. So we may come down to these levels and still be bullish. We could come down to the 600 level and still be bullish because of this pattern. So at this moment, I would say we are pulling back down. We will do for the next couple of weeks, maybe 3 weeks. And then we will see the beginnings of a move higher, potentially beginnings of a move higher, in line with what is the underlying support of this market, which is that bright green bullish Andrews-Pitchfork. I don't know if I'm going to have a look and see if there's any comments has anybody got. I'm going to ask see if there's any questions. Right, it's mainly about carryover. If you have any technical analysis questions, please put them in the comments and I will answer them. But if has anybody got any questions about this right now, then I'm happy to answer it now. Righty-ho. I'll move on to the next chart, which is Paris milling wheat. So excuse me 1 second whilst I get that. This is Paris milling wheat. And as you can see, the pattern is not dissimilar. It's very, very close to it. There are some differences, and I'll show you what they are. We have the diamond pattern here. This is where it all started from. Then we have the vertical run-up pattern. And here, as you can see, it basically, there was no extension on the upside. And we came straight back off again. I would say that this, which is the neckline for an old head and shoulders top, which today is at 244, plus this upper tine, which today is at, where are we? 4th of August. 247. So 244, 247, those are the resistance areas above the market. They eroded this this rally because we turned around once we got above it. We did one close above it, then one close basically on it, and then we just collapsed, even though we made a new higher high. And that is a key reversal down, which is a really good pattern to look at. And as usual, we've come down to the main 50% Fibonacci line, which is 227.25, which is half the move, the median, that half the move of the move up. We've come back down to that and we've held there. The middle tine is what's going to be acting as support. Now, that's the bright, red, bright red middle tine, which you can see there. This is the same pattern. It's late January in this case through to mid-June. So it's a slightly constricted, concentrated move, but it's still the same move. And we are still looking for higher. So I would suggest you've got maybe another 2, maybe possibly 3 weeks of holding at these levels, maybe going a little bit weaker. We could go down to this level here to 227.25 and still look good. We could even go down to these levels and still look good. This is the lower tine, and that's down at 216. But we will then, I'd look to see if we can try and move higher. What's interesting here is the short medium moving average and the medium moving average are a lot lower. That's the difference, I think, primarily you see it. One, it's constricted, it's in a narrower period of time. And secondly, the supports are at 219.5 and at 216. We have a gap here which could fill in. I'd like to see that gap being filled in, much like on Chicago wheat. But I would still say at this particular point in time, this is a bullish pattern here. This is a key reversal. This is not quite key reversal, it's an outside day. So it's a mildly bullish pattern was yesterday. We're still above this 50%, which is an old one from 2024 at 230.5, but it's still acted as support, as you can see there. And this main pattern, the main support in the immediate vicinity is at 227.25. I'm open to any questions on that if anybody has anything. Righty-ho. I'm going to move on to Chicago corn. And it's not a diamond bottom pattern here. Instead, it's a descending, this bright red one here, the descending expanding wedge pattern, which was the base of the move throughout June. And then we had the run up, the vertical run up, and it was a straight run up. And the thing I draw your attention to is this is a bright green. It's a derivation of the Andrews pitchfork. It's called a Schiff pitchfork. It's a very mildly bullish Schiff pitchfork. And can I draw your attention how it hit the top of that pitchfork there on the 24th and then came straight back off? Now there is a triple top or double top Adam and Eve type here. So we have some further resistance, which is capping the market at the moment. It's not very strong resistance, but it's there. The drop did not manage to get down to the move for June to July 26. That's down at 449. We only managed to come down to the medium moving average, which here is above a lot of the market, as you can see that. In fact, the moving averages are in a different order. We've got the medium here, which today is at 457 and change. That's the support on the market. Then you have this one, which is an old lower trend line for a descending triangle. I'm not sure how good that is. I've left it in there, but I've kept, I'm concerned about it. But the main support, as you can see, we have the long moving average, which is this one here, and the short medium one here. The long moving average is at 250.5. The short medium is at 450.5. The short medium's at 448. That is the area where I would look to see support, and that ties in with the 50% Fibonacci line, which is at 449 and an eighth. So that area is the main area of support. There's another area of support here. We have some little bit of resistance here. It's not very strong, but there is a little bit of resistance. We've had the run up, this time from a descending expanding wedge pattern. We've had the beginnings of a pull down. I can still see it moving down potentially for the next 2-3 weeks, but it would not surprise me if we turn and move back higher. The main resistance is this green line, and that's up here at 491 3/4 today. Beyond that, we start having resistance from 2024, which is up at 505, and then up here, some older resistance from 2023 at 516. So move up, sorry, a pattern, this time an expanding wedge pattern, descending expanding wedge pattern, a vertical run up, a pullback, potentially maybe even more of a pullback, but then the main pattern is to go higher still. And that's it. I have, thank you, Sergey, very much. I appreciate that. The ones I would like to look at is, I thought it might interest you as well, would be to look at the euro dollar to see what's going on the euro. And to be honest, not much. We had a pattern here, which is an ascending wedge pattern. We broke on the downside, false break. We broke on the upside, false break. The main pattern is this green shift pitchfork, which is the one which goes from the end of January through to the middle of April. As you can see, it's brilliant at showing the channel of the market. So I drew this in April, middle of April, and it's been consistent in showing, apart from the fact I've got my labels all over it, it's been showing the pressure on the downside. That currently is at the top side's at 1542, 115.42, the downside's at 112.70. This pattern I thought was an ascending wedge pattern that became a double bottom, but neither of them seem to be working properly. The main pattern, the bright green descending bearish shift pitchfork, is the one that's running the market lower. And as a final treat, I would like to show you Brent crude oil to give you an idea of what's going on in some of the other markets. This is my messy chart. I'm not going to show you that because it's too messy. What I did was I simplified it and I made it like that. And you can see easily what's going on in there. We had two patterns, which is the neckline here from September to November 2024. We had that as a support, and then we had the neckline from both head and shoulders top, July to November 23 as a resistance. The market traded in between that area. Yes, it went above it, but there was only one close there, no close, no close, one close, and then immediately back down again. We broke through that, and we broke down to the uptrend here, which you can see from December last year. And we made a V bottom, again, a nice run up, pullback of 50%. And I've managed to draw this dark blue shift pitchfork, which is the one which is from middle of May through to towards the end of July. That's now showing the bearish angle of attack. But there is also this pink larger one. It's a longer term pattern, and that's showing the resistance. And how good that resistance, I drew that back in the beginning of July, and it hit the resistance there on the 23rd of July, peaked and came straight back off with what effectively is a pipe top. We have a gapping move down, and now we're running along this one as support. And what's also interesting is this line here, the gold long moving average, that's also acting as support. So support today on Brent crude oil is at 82.61 and at 81.39, which is this one here. So that gives you an idea of what's going on in some of the markets. I'll go back to corn here. If anybody would like any questions on anything, I'd happily answer anything, and I'm at your disposal.
Eddie, many thanks. It was just amazing presentation, very, very useful. So we are getting better picture at least sense where the price may go. And as usual, it's very, very useful. And we may have some comments, questions here. I'll start with our dear friend Silvio. He just put the link to the informational channel he's running. We found it's very useful, so you may take a look. Our dear friend and partner Hasham has a constatation, and I'll read it. We all knew that there is a big carryover of the crop 25-26, and now we have the new crop 26-27. So with this war, the logistic disruption will end up a crisis. All importers are afraid to buy, and the situation solved and price will go down. And this is the main reason of the lack of the demand as in Egypt. For example, in 2 weeks, we have $20 increase in price of wheat. So I do not think situation will remain for even 1 month between. Russia and Ukraine as both their economies count of agriculture. So Hasham is really top expert in Egypt market. So it is very useful. Many thanks for your comment. All others are just giving the credit to our speaker. Ganesh is standing outstanding session with practical market analysis, management industry update. Thank you for sharing your knowledge. Many thanks. And I only can agree with the best speakers are here. Sergey, amazing charts. Many thanks, Sergey. I'll maybe have the question from Amrutha. We are seeing in Serbia, just continental part of Black Sea, the huge basis is widening actually. What do you think the key driver right now is the logistic? My opinion is that the increase of the basis is due to the things that export is pretty limited. The Danube has historically low level, so we do have some issues in Ukraine, in Russia, Hormuz. So what do you think is it the biggest maybe factor to watch? And
Yep, can you hear me? Yep.
Yeah.
Yep, cool. As you mentioned, like one of the factor that would restrict the flow of the corn through the European ports would be the water level in Danube, which is like a really concern for the traders, as in it with the drought, it is like at the very lowest level. So it would be very tough to even sail out the barges through the Danube. So maybe an alternative route that the traders would be either via the railways or the trucks through the western borders to the European countries, and maybe that would be something to watch for. And for the case of Serbia, as I mentioned, like the new crop would for corn would definitely flow through the trains and the trucks through Hungary and Italy. So yeah, that would definitely something to be watched for, and how the traders, especially the producers, would match for the logistics cost involved for transporting the grains from the origin to to export them.
Amrutha, many thanks. We are seeing already that the change of the logistical channel, because the traders are already with the contract, so they have to fulfill it in some way. Danube is really low, and it will be the issue. And most likely, logistic is the very hard to estimate, to predict what will going on. So pretty much we are depending on the geopolitics and
Yeah,
climate
definitely.
change. So,
Yeah.
so that's it. And maybe other things from the commodity exchange here, the quality concern regarding to the regional, like a wheat. As example, Serbia has average yield right now of wheat, but with increased quality. So we are seeing new markets. So milling industry from the regions are buying the Serbian wheat right now. So it's a bit a different pattern than we are seeing usually. So. That's the also. So
Yeah,
many things.
good to know that. Yeah.
Yes, there is a lot of demands from the other neighboring countries. So from the milling industry, never we had never a business connection or trading with those entities, but now it is. And Eddie, what do you think? It is very complex now. We saw the really excellent analysis on the grains. But what you are thinking? What are the commodities? Is it oil, euro, dollar, gas? What other commodity to look when we are thinking about the grain price direction? What is affecting the grain price more right now?
I would say natural gas. I would say natural gas, because and it's not just the grain markets, because you have a situation where natural gas is used as a feedstock and an energy source. So you got it as a feedstock and also as an energy source for making fertilizer. You have it also in for use for making sulfuric acid, which is used also in fertilizer, but much more heavily used in mining for copper specifically. So the whole Gulf region is pressured, I think, because natural gas, and it's not natural gas coming out there or replacing it by elsewhere, but also because they use the actual fertilizers produced in that region. For example, everyone said, "Oh, you can go to America and get natural gas, and it's a lot cheaper." Yes, it is, but you can't get it out of the country. I think there's one major port, and the only thing you can do is what the Germans did during some of the times when they had problems when the Ukrainian war started, which was to get a floating offshore gasification plant. But there's only a few of those around, and people are using them. So I think that one of the things to watch for is international gas prices. Crude oil, yes, it's a constant. I put it up there because it's in it, but you can't look at every single gas price. You can't say, for example, I look at the European gas prices. They're not good enough for agriculture. They're not the ones you'd look for agriculture. So I look at crude oil to give an idea of what gas prices would likely happen. I think that's the one thing is to watch, is to not so much see what the price is, but the fact that supply may not be there. One of the things that I've known farmers in this country who have bought enough fertilizer for next year already. They didn't leave it till later on in the year. They bought it, they like 2-3 months ago, they bought it and they paid high for it, but they are secure in their price. They know what they've got. And also on top of that, you've got a situation where you won't have supply. It doesn't matter what the price is. The supply may not be there for fertilizer. And I think that's the one thing that's worrying me. Fertilizer, yes, it's a product also, and I'm looking ahead, but it's also I look at the natural gas price first off, because it impacts so many other things in its processes. And sulfuric acid is the one mainly I'm looking at. China stopped exports of sulfuric acid recently, so because they're trying to keep it for their own selves. They're one of the other bigger suppliers in the world. So it's not so much how much you're going to pay for it, it's whether you're going to get it in the first place, if there's any available.
Perfect. Many thanks, Eddie. It is a very interesting angle, and we are hearing about, I guess, how critical is and how important it is for grain prices. So many thanks, Amrutha, Eddie, for just excellent presentation once again. And if there is no other question, I would like to thank you and to thank all the attendees here. It's such a large number. And for next month, most likely we will have AI intelligence who will be moderator. So I will lose my job, but it will be, I'm sure he will be much better than me. And looking forward to see you once again next month. We will have our regular grain brief.
He's not as pretty as you.
He's just smarter, nothing else. Okay, but thank you very much, Eddie, and I wish you a wonderful day, and goodbye. See you next month. Thank you.
Thank you so
Bye,
much.
everybody.
Bye.